Deep below London, there is a vault, and that vault contains thousands of tons of solid gold, reinforced by a door that's heavier than a double-decker bus. With the backdrop of an uncertain world, gold has surged 16% this year, and it's only March. But why is it valuable, and why do people invest in it? It's a shiny rock. Well, for starters, nature struggles to make it. It takes a star much more massive than the sun exploding into a supernova, and the resulting temperatures of 1 to 3 billion degrees Celsius is how you make gold. And that's why it's so rare. On Earth, there's only about 244,000 tons of gold, compared to around 1.7 million tons of silver. Now, it is believed that there are millions of tons of gold in the Earth's core, but they are inaccessible, and the fact that it's finite gives it its value. So in this video, I'm going to do two things. First of all, establish if gold is a worthwhile investment. And second of all, answer this question. Does it have to be yellow gold? Because nowadays, you have different colours. In the 1990s, white gold was the rage. In more recent times, we now have purple gold, which is pretty much unheard of. Now, it's important to note here that white gold is generally more expensive than yellow gold. Now, that's because mainly the manufacturing process is more difficult. If you have an 18 karat golden ring and an 18 karat white gold ring, they contain the same amount of gold. They're just mixed with other metals like aluminium. Purple gold is the most expensive and rarer. So is there a place for investment when it comes to different colours of gold, for example? Now let me start with this in terms of answering if gold is a good investment. Take a look at your body. For most of you watching, I imagine you will find some jewellery. If I look at this, for example, this ring is gold, or so I am told. Now this ring does not produce an income. It just sits there and looks at me, as Warren Buffett said. So where is the value in investment for gold? But its value is more than its rarity. We first have to understand currency. If you go back to the late Stone Age, 40,000 years ago, we traded objects. You give me your sheep and I'll give you a piano. That was a terrible example. But the point is, it was object exchange. When gold came around, that became currency for thousands of years because it could be used to buy anything. The problem is it's hard to store, you can lose it, it's very finite, which creates practical problems as the population grew. Gold is just a derivative of value, the same way that money is. It's a way for us to assign a value to the things that we exchange without exchanging physical objects. And to this day, gold has a value. It's not a currency anymore. After we left the gold standard, it stopped being a currency. Now, in terms of returns, gold is not a strong performer. If you look at the market from 1802 to 2023, gold has delivered a return net of inflation of about 0.6% per annum. So it broadly tracks inflation. Whereas if we look at bonds have delivered about 3.5% per annum net of inflation, and stocks have delivered 6.8% a year net of inflation. So if you're going into gold for strong returns, you're going in for the wrong reason. The reason that you use gold is because it reduces correlation. In a portfolio that's diversified against different asset classes, you can smooth out the journey by having uncorrelated assets. It's the old story of the shop that sells umbrellas and ice creams. One does well in the rain and the other does well when it's sunny. Stocks and gold are not particularly well correlated, which is why with the mayhem this year and stock markets going down, you've seen gold go up. People tend to flock to gold in times of uncertainty, so it's a safety hedge. It helps to balance out your portfolio, and decorrelating your portfolio can actually lead to stronger returns as a result. So it's really a case of having some gold, not too much, and then other assets like stocks and bonds as well. I would also add that gold is pretty volatile. It fell by about 25% in 2013. It's almost as volatile as stocks without the reward to go with it. So overall, it does not produce income. It doesn't have great returns and it's volatile, but again, it helps to diversify and reduce correlation. So how should you buy your gold? Well, you could own it directly, keep it in a hidden chest somewhere. That's fine if you're a pirate. There are better options available to access gold. If you own it directly, there are often costs to maintain it. It's more illiquid because you have to find a buyer. The price is more difficult to gauge in that situation. You can't hold it in an ISA, although if you do buy gold bullion when it's freshly minted, that is CGT free to UK residents. So having established that it might not be best to own gold directly unless you're a gold enthusiast or a sea marauder, what is the other big option? Well, deep below London there is a vault, and that vault contains thousands of tons of solid gold, reinforced by a door that's heavier than a double-decker bus. This is of course the Bank of England's vault, but there are several other vaults similarly holding thousands of tons of gold. The total amount of gold in below London is worth hundreds of billions of dollars. And some of those vaults contain the gold which backs the ETF gold funds. Because you get gold funds which use physical gold to back the value of their fund. So when you buy into them, you are buying real gold, physical gold. And the benefit of using a fund is simple. You don't have to do anything. You simply buy into it. The costs are relatively low. And what you get out of that is liquidity. You don't have to manage the gold. You get security. And it's much more liquid, so you can sell whenever you like. You can also hold it in an ISA or a SIP, a pension. So if you're going to buy gold, unless you really are an enthusiast, for most people, the simpler way to do that is via a fund. So what about the second question? Do you have to invest in yellow gold? Starting with white gold. So white gold is not naturally occurring in nature. You can't pull white gold bars out of the ground. It's the way that it's made with other metals that create white gold. The other point being this: it may sell higher originally, but its resale value tends to be lower than yellow gold. And there are no white gold funds, so you'd have to own it directly. When it comes to purple gold, the reason that's so expensive is because it's very hard to make. It's quite brittle and it's hard to cast and mould. So making it is a big problem. So manufacturing puts the cost up. It's also little known. There's not really a market for it, certainly at the moment. And again, there are no funds available for purple gold. So with both white gold, purple gold, you'd have to just own jewellery, for example, and invest in that and own it directly. So the simpler option is just to have gold, i.e. through a fund. I hope that was useful. If you like what I'm trying to do here, please do like and subscribe. Thank you.